Hello, everybody. It is great to be here one more time today. And my name is Gary Fowler. I'm the CEO, president, and founder of GSD Venture Studios, an AI and quantum venture studio located in the heart of Silicon Valley. I'm a 17-time serial entrepreneur with several unicorns under the belt. I was on the original management team of Click Software, which was sold to Salesforce for $1.35 billion, also Eva.ai. We believe at GSD that intellectual capacity is evenly spread around the world, but opportunities are not. Today, it's my honor to host Runday AI. Runday AI is an incredible company that's using intelligent agents to be able to help in all kinds of ways, from sales, support, to marketing agencies, to help you get closer to your customers with a human like experience. With that, I've got an incredible guest of mine and a really, really good friend. So, Matt Sauer is a serial entrepreneur and investor. He's got over 35 years, yes, 35 years with experience in asset valuation, has witnessed how data gathering, assimilation, and analysis form the basis of a valuation. He understands that AI revolutionizes data availability in the traditional investment process and to be able to help increase the investment outcomes, leading to faster and larger result dispersion. He started his career as a portfolio manager at Oak, Ariel, and Lateef, and he's engaged extensively with C suite executives, leaders across the world, investment bankers, and analysts. He looks at all kinds of different industries and understands that they'll face unique impacts from AI based systems on their risks and rewards, requiring a blend of traditional business model knowledge and understanding of technology and technological change and rewards. He was named an all-star manager and ultimate stock picker by Morningstar. Why at Oak Value? Ooh, that's great. I love to hear that. And has been a general partner at Lateef and Everstar, with the latter outperforming all benchmarks over the last 4 years. So with that, I'd like to bring my very, very good friend, Matt Sauer, on stage.
All
Hi,
right.
Matt. How are you? Ooh,
Yeah.
you
Good morning, Gary.
you're hey, appreciate your nature situation. I
Yeah.
see, I see the hummingbird by your head.
That's great. That's great.
So,
So,
Matt, how did you get,
well,
when you got started in your journey, how did you get started? So, when you went to Oak, what were you doing and what?
I yeah, I went to Fuqua School of Business at Duke, and I got out. I worked for the Federal Home Loan Bank Board actually for 2 years, and then I worked in a family office in Detroit area where I was from originally for a couple of years. And one of my friends from Duke had started a company called Oak Value Capital Management, and it was very much in its infancy. And I joined him there, and we built it up to a couple $1 billion under management. So it was quite a ride there. And
So, how was it, by the way, going to Fuqua? Did you like it? Was it interesting for you?
yeah, I liked business school, and I think business schools have changed over time, but I certainly enjoyed it, and I certainly um, got a lot out of, certainly on the finance side. The professors they were very good very good. Doug Breeden was there at the time, and then Cam Harvey joined after that. So it was a very good finance team, and I got a lot out of that.
Wow, and it must have been interesting going from Michigan down to North Carolina to have some warm weather for a change, right?
It was. Of course, I had gone to Duke, so the office was half a mile from the campus, so I was pretty familiar with the area at the time when I moved there. But it was certainly a change in some things, especially the weather, and I enjoyed my time there. So one of the things you were talking about with Runday AI and gathering data and information is kind of our topic today, is how artificial intelligence is going to be more on the producer side and increase the margins of businesses in a way that the internet was on the opposite side of that. The internet kind of gave information to the consumers, and everyone got a lot smarter about when to buy things and where to buy them and all that. And this artificial intelligence is now the technology is going to push back on that. For example, this morning, Southwest Airlines said they lost 2 points of revenue because people bought correctly, the summer travel, they bought it when the prices were lower, and they bought too much on the curve, and they didn't get a chance to basically start raising prices as the supply dwindled. So that's where artificial intelligence can be a pushback on that in the future, and help companies determine which consumers are price conscious, which aren't, and basically increase margins over time. I think the stock market is anticipating some of that based on the levels that it's been at, right? I mean, I think there's some, given all the negative news we've had on all kinds of things, the stock market's been pretty healthy, anticipating there could be changes in the producer surplus going forward.
Yeah, no, so let's go down through it. So look at it, when we use AI and we talk about things like these producer margins, I mean, how big of an impact do you think it's going to have over the next 3 to 5 years?
3 to 5 is probably on the lower end, but it's probably going to have more impact than we think now, but it will come later, like all technology, right? And I think to the extent that you can aggregate your customers based on price sensitivity, and that's going to be very, very powerful information. And what one of our theories is that artificial intelligence is kind of merging information and information theory. Information theory by Claude Shannon was the reducing of entropy in information, right? So, that's what AI is going to do. It's going to take something that information has a lot of noise in it, and as it makes it more and more useful, it's going to be more advantage to the corporate world and to the margins going forward.
Well,
So,
that
I think
you're right about that, about hyper
what was that?
personalizing. You're right about that, to be able to hyper personalize, to be able to optimize and make it more efficient. But the one thing is, they got to use it, Matt. They're not like, not all these
Well,
companies are using these tools the way they should be, right?
then the best ones will, and they'll survive and become stronger, and keep moving. But I do think we're still at the beginning of what we're going to see in that movement. It took a while for the internet to actually become, consumers were really engaging with it the way they do now, and some of that obviously was the devices, right? And in the case of the corporate world, it's going to be more about the chips and the software that they can utilize. And with the consumer, we had to put something in their hand for them to constantly engage with the internet. We're not going to have to see that in the corporate side, but it's still moving slowly as we go, but it's going to start picking up steam.
Yeah. And so, what are your bets? What kind of verticals do you think are going to have the biggest impact?
Oh, I mean, you got to think insurance should be able to capitalize on this, and banking as well, and anywhere where information is the the commodity they're selling. And there's a lot of companies that become information companies as we've gone through life on the internet, but I do think that there's going to be some revaluations in some of the industries based on how much they can squeeze out of AI as far as improving the company,
And what
improving
do
the
you
margins, yes.
So, what do you think, like, for the consumers? What is their use of AI, generative AI, and AI? How's it going to make the experience and the engagement with consumers better?
Well, generative AI, of course, is what a lot of people think about when they think about AI, and that's who the thing that writes your term papers for you in college.
Hmm.
That the consumer is going to love that as a tool,
I'll
but
tell you what, Matt. If you were back at Fuqua and you had Chat,
oh
can you imagine how different the world would be today?
yeah, yeah, yeah. I mean, and it the information obviously is going to move faster, and but it's going to be more in the hands of the corporations. There, it's going to be, like I said, the pushback against the the information surge that the internet gave us, right? I mean, internet, for example, I remember talking to, the CEO of Nordstrom's after, this is early in the internet era. And Nordstrom's used to have a policy that you could buy a pair of shoes and bring it back and get the price that you paid and all that kind of thing, right? Well, then they started having people buying, shoes 80% off that were green and size 18 or whatever, bringing them in and trying to get the full price back, right? And that was, the consumer basically starting to take advantage of the information that was out there on the internet. Mm-hmm. And, and obviously in some retailers, as you've seen over time, the internet has affected them in very bad ways, while others it's helped, and it has to do with the business model, the original business model, and that kind of thing. So, but that was that was like their introduction to like, this world is getting crazy on us, right? Because these policies that we always had that were very consumer friendly, the consumer can now use them against us at the time. Just like I think the policies that are going to be that AI generates in the way it can distill information is going to be, the power shifting again back to them. So it's like I said, I think the stock market has a tendency to believe that this is coming because of it. Like you've seen multiples, basically on all industries rising. So, and no matter what news comes out in the last couple of years, it's been a continuous upward move.
Yeah, you're right about it. I mean, look at my friend, Jensen from NVIDIA. I mean, that company's going through the roof because he's building the, incredible. I remember getting together with him actually back 2012, 2013, and then about 6 years ago, we had a conversation. And I mean, he's changed the world. I mean, because you need to have the power, you need to have these systems that can help. And by the way, you do need the energy too, right? You got to have good electric power. Sometimes we forget all this stuff's going to take a lot of electricity.
Right. Which I think is one of the big, sticking points on this is because we relying on the utility companies to put the CapEx in that we need? Because that hasn't been a traditional thing for them to really, increase that kind of supply that fast. So we'll see how that goes, because we're going to be running up, obviously, with grid issues coming on. And we're using electricity and AI. Potentially cars may be soaking up more. The increase in electricity is a very interesting subject. And it's also the companies that provide it are more dividend paying companies than they are growth companies. So are they going to change their stripes, or is it going to become a sticking point? We'll see.
Yeah, it's interesting. I agree with you. It's it's some of those companies that are out there. I mean, it's I think looking at utility companies and trying to. I mean, it's very simple. If you got gas and you got gasoline cars and you're getting more cars, you better get more gas stations, right? Or you better get more supply. This is not like rocket science. It's very interesting. So, you've gone down through. You've seen a lot of changes take place, Matt, over the years. You've seen the internet boom. You've seen the e-commerce boom. Now we see this AI boom. How does this compare with those from your own personal opinion?
Well, the internet boom was substantial, but it had a lot of imitators come to the marketplace, right? So everybody remembers pets.com and those kind of companies that came in and went because their business models were so flawed. The AI boom is about increasing productivity across all businesses. And it's not, it's not like I said, it's the difference between the producer and the consumer. The internet started off as a consumer land grab, right? We need eyeballs, we need consumers, we need all this. This is totally different. The CapEx, NVIDIA's good customers are, Google and Microsoft and companies that have tremendous amounts of cash and cash earning ability, that they're going to be driving the capital expenditures that NVIDIA sells into. So it doesn't have a lot of Me Too imitators showing up like you saw at the, as far as the public markets right now and what's driving them. You don't have a lot of these, you're going to have some companies that say we can do chips and AI and that kind of thing in the semiconductor sector. And, but NVIDIA obviously has done an amazing job. And it's an interesting business story because they hollowed out all of the growth of the chip industry. Intel obviously had, the commanding lead in chips, and NVIDIA started out and they took, this growth into part of it, this growth part of it, this growth part of it. And then when they got to AI, obviously it goes parabolic up. But, they left Intel with, PC chips.
Yeah,
So,
I agree.
and some other things. But I mean, but they really hollowed out a corporate leader that looked impregnable at one time.
I remember having a conversation directly with Jensen in his office with my MBA students. And I said, "Well, how did you come up with this?" He said, "We went into an arcade. Remember those arcades? You used to have all these
Yeah.
video machines, right? And they had like Dirk the Daring and Space Invaders and all that." And he said, "I wonder when the capabilities of the graphics can be used on a PC." And he said, those are some of the ideas behind it with his other two partners. And look at it now. I mean, it's changed the face of things. But how big is this going to get, Matt? What do you think? I mean, over the next 10 years, how much, because I mean, virtually every vertical market's going to have generative AI, right?
Right.
So how big is it
So,
going to get?
well,
I
are
mean,
you asking how big is the chip market, or
how much impact is it going to have on the planet in terms of, and I don't
well,
mean from,
it's going to have substantial impact, and it's going to change GDPs, in different countries, and there's going to be winners and losers, and it's going to, it's the industrial revolution of our time, right? And it's going to make winners and losers, like I just said, and it's going to, I think, you're talking about, you can probably get to 12 to 15 trillion dollars of the big, tech companies and what they're worth, and they're probably going to be worth substantially more in the future. The Mag 7 are companies that provide tools and services for people that people want, and they have huge consumer surpluses, which is the ironic thing of where we started on this. The consumer surplus is, your pricing power. Well, Google and Google and Facebook as entities give their product away.
yeah.
I mean,
Well, I mean, really and not really, right? Because
I understand that how they
your
make money.
data, the thing is, most people don't understand, right? We get down through and you Google something, they're collecting information about you. And all of a sudden, you're on your phone and I start getting ads from Upway bikes because I happen to look online or talk about buying an electric bike. And all of a sudden I have exactly the kind of bike I'm looking for presented at a discount to me. It's just unbelievable. I mean, it's like,
right. I mean, they definitely have a model that makes money, but what would a consumer be willing to pay for having Google? I mean, how much would you pay a month? I mean, could you live without it?
Not now,
No.
not now. But the thing is,
So when you ask how big they can get, well, they're going to continue to become bigger and bigger pieces of an economy that's going to continue to grow. And so, the iPhone was an amazing invention that it changed a lot of industries. It changed Manchester United in soccer, where they had fans that never saw a game, and then all of a sudden, with an iPhone, they have an ability, to actually see either delayed or some real time, plus all the information. I mean, it changed it changed their value proposition, just like it changed so many value propositions in the world, right? The iPhone really is the thing that I think AI is the follow up to. It's going to change value propositions rapidly across the world.
Yeah, because we can now synthesize the infobesity that's all around us and make sense of the data. The problem is, like we say, there's about 300,000 items in your personal cloud. The entire web in 96 was 100 or 257,000 websites. You're more information in personal cloud, the entire web. And your
Right.
own personal world's following the same trajectory. Yeah, doubling every year. So in 5 years, when you have 10 million items, how in the world are you going to find things? Think about this. And your own
We're going to
email.
find them through AI is going to help you
Well,
navigate. It's
that's
going to
exactly it,
it's
right.
like what you're saying is the world has more and more information entropy, right? Like a gas, it just keeps expanding, right? And
Yep.
AI is going to liquefy that basically, right? Bring it back down to something we can manage.
Yeah, so we can transport it and use it in a different way. You get it out there.
Yes.
But
Right.
now the situation is like this infobesity. I talk to people now and they're using WhatsApp instead of using email. And I do it myself because I know I can see the message and I got so many hundreds of emails every day. I don't know what's right. And then I'm afraid I check junk mail every once in a while, but I don't know if did it really take the right thing to junk mails or something important for me.
Right. Right.
We got to have these
Yeah.
all intelligent assistants to help us make sense of this, not only for email but for everything.
Well, I'm sure you'll have bots that rank what you want to see, right?
You know,
Certain people, the bots will rank instead of doing it on time. You can rank. It will be able to rank them based on what you thought was most important going into it, right?
right.
So you can teach it what's important, and then it doesn't have to rank it on time of day where you have to go back an hour and a half, go to see what happened.
Exactly. I agree. It's going to know what you like, kind of like your grandmother loves and cares about you. I just wrote an article, by the way, in Medium about applying B.F. Skinner's principles of operant conditioning and Carl Rogers based on unconditional love and humanistic psychology and bringing that empathy and compassion in and tokenizing things like goodness, right? So,
Right.
and like you said, you got to rank what's important to be because you can't look at everything anymore. It's just too hard.
Right. Now, and you don't. And the funny thing is, the AI will know more about what you like than you do.
Well, that's it, and that and maybe it'll present you with things you should and want to look at, right? That
Right.
you normally and even buy those things. Soon it's going to be a situation as you're not even have to going to shop. It's going to know before you know. Hey, listen,
Right.
I need those new pair of Bobbolette shoes because I'm going to be playing tennis in 2 weeks. It already orders them and it knows the color you like. And oh, by the way, I found a good deal.
Right. Right. And that will the efficiency of that, and it'll be interesting how much time that's wasted, on something like buying a pair of shoes. How that time gets reused by you, and
Yeah,
does it make you more productive, and does it then allow for a faster expansion of economies because the most productive people are using more hours being productive a day.
well, here's the other thing, and this is what I'm seeing. The people that are using these tools, they get superpowers very quickly, and they're dramatically moving ahead of everybody else. But I don't know about your opinion, but my situation is, and what I talk about is that as we start to democratize this stuff, we're going to have a level playing field for everything. And so, how does a stock move up when everybody knows that it's going to move? You know what I mean? And when's the time to invest? Well, they know they're all going at the same time.
Right. Well, I mean, yeah, the efficiency of the stock market is becoming tighter and tighter and tighter. Yes, that's certainly something we've seen too. But there's always human emotion when it comes to the valuation of things, and that's not going to go away. Now, the question is, will we just replace the humans with artificial intelligence? Will there be, will the value, will assets be valued by humans or going to be valued by AI? We'll see.
It's good. That's another show, Matt. That's
Yeah.
another show because it's really interesting. Listen, we're coming to the top of the hour. Closing thoughts, Matt, and how do people get a hold of you?
Well, they can get a hold of me on LinkedIn at Everstar Asset Management. And I think the summation of this is the world is going to change at a much slower rate today than we might see when we hear the hype of AI. but it's going to have much more magnitude than we can even comprehend. And so, usually you get about 18 months or 2 months, 2 years into one of these, and everyone says, "Hey, it doesn't look that different yet." But
Yeah.
it's going to be coming, and it's going to be the magnitude will be quite large.
Yeah, no, it's like a tsunami coming in. Well, Matt, listen, and how do people get a hold of you? What's the best way to reach you?
Like I said, I'm on LinkedIn and Everstar Asset Management, and the you can look up Everstar Asset Management. You can look me up, and I can be found that way.
That's great. Well, Matt, I want to thank you for joining the show today. It's an honor to have you as always. I appreciate your friendship, and I really enjoyed it. And to all my audience out there, thanks for joining one more time. Runday Presents. Stay happy, stay safe, and stay healthy. And I'll be back to you all again soon and for another exciting edition in 2 weeks. Thanks, Matt. I appreciate it.
Thanks, Gary.
Yeah. Bye bye, everyone.